Okay, so what kind of situation do we currently have on Euro USD? Let's make a full breakdown. So starting from the monthly, what we have is a market that clearly has tested multiple times a very strong level of demand and support, which was this level here, from which the market started this move to the upside. Then again, the market went to test this zone, creating multiple rejection candles in which the market each and every time failed to break lower and closed above. After that, it was pretty simple to expect the market to make this move to the upside, specifically because if we look at what the biggest banks and institutions were doing on Euro USD, we could clearly see that they were adding a lot of longs. In fact, what we could see is that we were going from a negative net positioning with minus 114k net positions and 271k shorts and 157k longs, all the way up to a situation where we had way more longs than shorts with a positive net positioning, and the longs have continued to increase up to the last report, bringing the net positions at 180k. So we had on the monthly a market that had failed to continue lower and break below the structure, plus we had clearly institutions adding a lot of longs on Euro USD. Now, why do I say Euro USD if we're only checking the Euro? Because all currencies on the spot are traded against the USD. So if you check the data for the Euro, you are actually already checking Euro USD. And in fact, the market has given us the move to the upside exactly as we wanted to see. Specifically, after this monthly candle, it was very predictable to expect the next candle making the move to the upside, because we also spoke about this pattern many times. If you have a candle like this, you expect the next candle to fill in the wick. If you're asking yourself why, I also made a YouTube video only about this topic, but the simple concept is that this wick is a retracement on lower time frames. Therefore, you have an impulse correction, an impulse pattern to the upside on lower time frames. Let me show you that that is the case also here. In fact, if we go down on the weekly, what we can see on the weekly, we can see that that wick is simply this retracement, and we have an impulse correction and impulse pattern to the upside. Specifically, if you remember, why did we want to see this retracement in the first place? We wanted to see this retracement because after an impulse, what do you usually have? A retracement. Specifically, if you want to measure this retracement, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse. And by doing that, what we can see is that the 0.382 was lining up with the structure resistance here, now towards support. So we had that 0.382 lining up perfectly with the structure resistance, now turned structure support, creating a confluence area at which we have a lot of liquidity that we expect the market to go and test before the continuation to the upside. Specifically, going down on the daily, what we can see. Now, on the daily time frame, if you remember, we made definitely quite a few analysis on Euro USD. First of all, we said after the market had created this move, we wanted to see the market go and hunt all the stop losses that were above this area and then make this move to the downside. And that is exactly what the market did. And then again, we spoke about Euro USD and we said that we wanted to see the market reach exactly this zone before starting the move to the upside, which is exactly what the market did. And then again, we spoke about Euro USD after the market had created this impulse and correction, saying that we definitely wanted to see this inverted head and shoulders play out and the market give us the move to the upside for the completion of the monthly and weekly and actually also daily patterns. And that is exactly as well what the market did. And I will link in the description of this video all this previous analysis, so you can go and check it out for further reference and more education. However, going back to our analysis, just quickly checking what we have on the monthly, I forgot to tell you that now the market is creating this overextended W formation. And after an overextended W formation, you want to see the market give you a move to the downside. Going down on the weekly, clearly the market is overextended to the upside, and also on the weekly we want to see a retracement, specifically on the weekly to where we would like to see the market give us a retracement. Now, as we did here, if we want informations on a retracement, we have to take a Fibonacci on the impulse, and we can see that we have a first target at 0.382 and a second target at the 50%, which is the Fibonacci level that is lining quite nicely, is just above the previous resistance, which is now turned support at this area. So going down on the daily, what we can see? We can see that we have an overall downside target at this level. However, the structure on the daily time frame is still bullish. In fact, the market is still creating higher highs and higher lows, and until that will be the case, we cannot be looking for any shorts, specifically because, as we just have seen, institutions still have a lot of longs. We still have 262k long positions. So a massive, massive, massive amount of longs. And until this will be the case, we cannot be looking for any shorts. However, it is important to say that these longs have already been reflected in the market that has made this huge move to the upside. So we can expect some profit taking on all these longs. But we won't have a confirmation that the profit taking is ready on these longs until we will see a break below this structure. In fact, we have the previous report here that is again supported this area. And if the market will remain above this level, the market can and should continue to the upside because we have such a massive amount of longs. So what we will be waiting for with students before we can be looking for a possible setup on Euro USD. Only if the market will manage somehow to break below this level, it means that institutions have started their profit taking on Euro USD. So only after the break on the retest of the level, here is where the opportunity will be. And as usual, the monthly, the weekly, and the daily time frames are the best time frames for the direction of the market. But the best time frame for entry is the 4 hours. So with students, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and for the market to give us the retracement from the overextension that we currently have. However, we still don't have any confirmation for this. Until the market will remain above this area, the market can and should continue to the upside. So as usual, we have to be reactive and not predictive. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.